Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be joined by the CEO of Soluna Holdings, John Belizaire, to walk through their Q1 earnings and give us an update on their exciting developments in terms of their HPC AI growth and their data center model. Now we've got a lot to go through in today's video, but before we get into it, please take a second, smash the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're currently holding shares of Soluna, your thoughts on their Q1 numbers, and outlook for the remainder of the year. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got John Belizaire back by popular demand. He's the CEO of Soluna Holdings. They just came out with earnings, but we've got a lot more to talk about in today's presentation. John, how are you doing? Great to see you again.
Bryce, thanks for having me on the show. Anthony, nice to see you. Appreciate you guys doing this. I think this show is fantastic. I really enjoy the analysis that you do, so I'm happy to contribute and tell you what's up with Soluna.
That's great. We're looking very forward to hearing about it. And we just were talking before we started filming about the investor deck that you put out alongside your presentation. So we're going to include some of those visuals. We'll leave it linked in the section below, but definitely encourage you guys to take a look at that in addition to the analysis here. So John, for people who've maybe missed the earnings this morning or haven't had a chance to go through that, can you give us just kind of some of the high level takeaways and highlights from Q1 2024?
Absolutely. We put out a pretty hefty release with a lot of numbers in there and updates, comparing this year, the first quarter this year, to 1 year ago. Guys, I don't know if you know, but I had just ascended to the helm of CEO 1 year approximately this time. And I think the key takeaway that you folks should have from the material that we've put out in this release is that Soluna's projects are profitable, in fact, very profitable. If you look at the gross margin generation, gross profit, and EBITDA potential for these projects, and the ramp that you've seen over the last year, it's clear that our focus last year, which has been to get our flagship site, Project Dorothy, ramped up, has helped us to begin to demonstrate to the market that our projects are differentially more profitable than our peers. And the neat thing about this is what you're seeing is very scalable and a repeatable model. We have nearly 2 gigawatts of projects in our pipeline. Every year we're unlocking hundreds of megawatts of that, and that'll help us to advance and continue to grow the company over time. The profitability of those projects attracts capital, and that helps us to fund and finance those things. And the other thing is that's helped us to expand into other types of compute. We now have a pilot that we just announced this quarter with a marquee high-performance computing company, and we also have an AI customer piloting our sites over at Project Sophie. Now, I want to jump into some of the numbers for you guys and what's in the release. The first is we had record adjusted EBITDA. We ramped $5.1 million in adjusted EBITDA compared to the first quarter of 23, which was minus 2.9. That was a challenging quarter when I came on, but that's an increase of $8 million, and that's been driven by strong revenue growth and really just this cost discipline that we've been focused on. We had strong cash growth. We were up 85% from the first quarter of 2023 and 32% from the end of 2023. We had a great revenue quarter as well. In fact, it was a record. We were up 24% to $12.5 million compared to $10 million in the fourth quarter of 2023. And we've been talking about the fact that our projects can support a diversified set of revenues, right? And Dorothy, we had mentioned, has the ability through our Maestro OS technology, it can participate in ancillary services and demand response. Well, we earned almost $1 million, $875,000 over the last period as the company completed the program's winter period. at Project Dorothy. So that's really demonstrating our ability to diversify those projects. And that diversification and model, again, can be cookie cut into different things. And of course, like I mentioned, we launched our new cloud service. So it's a new subsidiary company that will be focusing on AI specifically. There's a whole host of things that you're going to hear about in the coming months. And we're partnering with a leading high performance computing company. And we're sort of focused on that activity in this quarter here. So that's a mouthful, but a lot has happened, guys. I think, we added a new CFO, and we've been focusing on a number of post-halving optimizations. That's it. Like, there's a lot more in that release. There's, I put out sort of a tour and the deck, as you mentioned, so folks should definitely go look at that.
Most definitely, and I'll make sure we get those numbers up on the screen. Very busy year for you as first year at the helm, and obviously a congrats in the tremendous comps year over year. Now I want to get into the cloud AI, the HPC, some of that as well. But before we do, John, from a macro standpoint here, the Bitcoin mining sector as a whole, a lot of people are kind of criticizing right now, saying, hey, you know what, Bitcoin price is down from where it was last quarter. Obviously, the transaction fees are down compared to post-halving. The block rewards have been cut in half. There's a lot of large-scale kind of pressures on this industry. Soluna has uniquely kind of differentiated yourself in a number of areas that you just alluded to there. How are you guys feeling about the remainder of this year, and what is your outlook for Q2, considering Q1 was very strong for this sector?
Well, that's a great question, and obviously we and our peers are sort of looking at what's happening during this post-halving period and focus on a lot of things like optimization and a number of different activities. Some of our peers are focused on growth. I think the key thing for folks to understand about Soluna is our business model doesn't only rely on hash price. What the network pays BTC miners, we certainly enjoy that. But it's really important to understand that we have spent a great deal of time not only righting the ship and turning the ship into a whole host of new different businesses, but we sort of re-architected, the way it works. And we have a mix of self-mining or prop mining. We also have hosting, which is based on more of a fixed rate, and it's a very healthy margin. And we also have some profit share arrangements where we operate other people's equipment. And we're very specific about the type of equipment and the efficiency of that equipment that folks can have in our facilities. And of course, we take a share of the output. So look, we also have services that we sell back to the grid, as I've talked about, ancillary services and demand response. So the nice thing about this model is that our revenue is more stable than other people. While we do participate in the upside, we also have some more firm revenues, in the downside. And so our cost structure as well is best in class. We've made mention to this a number of times. We enjoy power development, through this curtailment business model that's, averaging just around or even just below 3 cents per kilowatt hour or $30 per megawatt hour. And you can see that evidence in the gross margins and profits that's in our Q1 deck. And we expect that to continue to persist throughout the year. We're certainly watching hash price, and we're implementing some technological enhancements to our facilities and a host of other things. But I think the key point is because of this model, we believe that we are well positioned to be a player in the tighter economic conditions that we're likely to experience over the next couple of quarters.
Yeah, some good points there. In terms of quarter two post-halving, obviously, with the rewards at 50% what they were in pre-halving, I'm assuming there'll be some impact on a couple of those services that you talked about. So obviously, self-mining will be impacted, and also you talked about the profitability share. I'm assuming that's an area impact. But from a hosting perspective, do you see is there any change in those types of revenues coming through?
No, I mean, most of our hosting projects our hosting partners are some of the top largest miners in the industry. We do that on purpose because they're creditworthy. They equally are maniacal about the configuration of their facilities, the types of machines that they have at any given time. And they tend to have the better, more current mining equipment. And so that's why we target them and work with them. We have a really open communication with them, to the extent that we're seeing, erosion in the model. They can deploy more equipment into the facility, or deploy better equipment that can participate in the whole Bitcoin ecosystem. The other key thing, though, to understand, Anthony, is because of our power cost, our hosting customers and we sort of benefit from that, right? Because that's going to allow us as a partnership, right, as a relationship, to stay on the network much longer than other folks will, as hash price pressure persists to a point where the Bitcoin network has to change the difficulty, and thus folks fall off. Well, that pie will change. And the nice thing is, because of our cost structure, allows us to continue to participate. That's true in the prop mining side, in the profit share side, and of course on the hosting side as well.
Yeah, I mean that price, per megawatt for energy there it has to be one of the lowest. I mean, there's not many miners who are quoting that level. I think only Cypher at the moment are freely putting in, their 2.7 cents a kilowatt hour. And even then, if you look at the numbers, that they produce like that, people are saying it looks a bit high. But I looked at your margins, and they were pretty good for all three services that you provide there.
And one more point is that when we quote our prices, unlike some of our peers, I won't name names, that does not take into account any of the ancillary service or demand response. That's our base price. That's like our starting point. So when you layer in all this revenue diversification and things that we can do on top of that power, it's materially lower than what I quoted.
Do the hosting clients benefit from the demand response credits?
They don't. That's just more cash for us to continue growing the business, investing in.
But I'm assuming if any of it, I suppose, is down to curtailment, how would that impact? If I'm hosting with you, I want to make sure I'm getting, as much at that really good energy price, as much round the clock servicing as possible. So if you're then saying to me, we're going to curtail these parts of the day, going through, how's that agreement work out?
Yeah, that's our special sauce, Anthony. The beauty of our model is that
got a hamster.
Yeah. I'll say this. Even with the curtailments, our hosting partners, we deliver the SLA that they expect.
The
uptime that they expect to see, and even with the hosting partners that expect that uptime, we still can deliver the demand response behavior that the grid sees. The only way to do that is to have technology to support that. Yes.
John, just a quick one on that. I think you said the credits were from the winter program, if I heard correctly, which is kind of contrast. Obviously, we see a lot of demand response in Texas in the summer heat months. Is this something for Soluna you guys expect to be actively involved in year round?
Yeah, our model is a year-round model, so we participate across the different seasons. So we're persisting as a service resource to the grid for the entire year. And the beauty of that is we can do both. We can do the demand response and the hosting and prop mining. And if you're a customer, what you're experiencing is no different than what we would have done before. The very behavior that we're already doing is of value to the grid, so we're able to monetize that behavior in addition to delivering the services to our customers and to ourselves.
Yeah, that's useful. I mean, you highlighted the highlights of the financials earlier in the conversation.
Yeah.
And from my perspective, you had certainly free cash flow hedging towards $5 million for that quarter, which is a positive thing there. There are a couple of obviously non-cash items that put you into a loss. You don't benefit from the mark-to-market price on Bitcoin because you don't hodl. And as we've seen with the miners this week, most of them are sort of the non-hodl miners. So we had last week sort of 4 of the big hodlers coming out with their results, and you could see the immense sort of like unrealized gains that they were applying to their accounts. Right. And it's great when the Bitcoin price rises. When it drops a little bit, that'll be a different story. I just wonder how people know. But free cash flow is king, because, you know, for a business to operate, you've got to have more money coming in and going out. So that's a positive sign there. Yeah. Just moving to the sort of the balance sheet and looking at the levels of current liabilities for the next 12 months. And for those viewers that don't quite understand, current liabilities are liabilities that are due to be met in the coming 12 months. So anything over 12 months is then determined to be a long-term liability. In that current liability is effectively all your debt remaining. And so really it's to sort of explain how the plan is now to reduce that debt. It's just, I think it's just over about $10 million at the moment. So can you sort of talk a little bit more about that?
Yeah, so at the company, we have 3 types of debt. One is at the project level. It was part of the Navitas financing. It was about $2 million. And because of the strong cash flows of that project, we've essentially nearly completed, paying that off. We're almost, we're probably more than halfway through that. The second is the convertible note. We started out prior to my role as CEO, that was about $15 million. It has, consistently dropped through a combination of different restructurings, and it's on our balance sheet at $6.2 million now. And that note currently comes due in July. That's why it's in the current category. But we do have several extensions with the 4th Amendment that we did earlier this year that allows us to extend that all the way into 2025, which will allow us to really focus on continuing to build the business. And as our new projects develop, they're financed and energize, we expect to have multiple options in terms of how to address that debt, and more importantly, sort of fuel our growth. The last category is the NYDIG debt. That one tends to be a bit more confusing for folks. That's why the number's quite big, in the sort of $9 to $10 million range. And that debt is marked as current, but it is contained to a subsidiary formerly known as Project Marie. That was the project we decommissioned. It was attached to infrastructure and equipment in that facility. We do have to carry it on our balance sheet while that wind down is ongoing, and I can't talk about the details there. But the parent companies are not obligated to pay those amounts. That's not a parent company obligation, because we consolidate, though, as a company. It shows up on our consolidated balance sheet. But if you would decompose the company, think of sort of like Soluna Holdings, way up at the top, right? That's where the convertible note is. And then you have a tree, and there's debt sort of sitting at different projects, right? So I talked about Navitas, there's debt there. And then there's this NYDIG debt at the Marie level. And, that's something that will sort of eventually wind itself down as we work through different, litigation and so forth. But the parent company and the upper part of the tree doesn't have an obligation related to that.
So I suppose it's like similar to the iron, where they have the SPVs below the main company, and they're in the same position going through that.
That's right. So debt is contained at the moment. Because of our structuring, right? We keep debts fairly sort of contained, right? So it doesn't bleed into other parts of the business. But again, as I said, the consolidation has it show up on our balance sheet, but investors have to sort of decompose that and look at the tree, and you start to see where things actually are.
So from a working capital perspective, over the next 12 months, you feel that you're an ability to manage that position there, because current liabilities are
that's right,
a little bit higher than current assets at the moment. So
exactly.
The money coming in.
Yeah, we feel comfortable about that. Like I said, the ones that are coming due, we can either delay those, or as our projects have more cash flow, we can make payments to reduce that. There's no interest accruing or payments happening on the convertible note. It just sort of sits there, and then we either continue to restructure, they convert as our stock performs, or we can also pay down. The Navitas debt is being reduced, and as I said, the NYDIG debt just kind of sits there. It's not, it's not going to be a payment that's due anytime soon on that.
I appreciate you going through that, John. I know we spent some time on debt last time, but that's exactly why I love this venue, you guys, is if you just see that $9 or $10 million number on the page and you don't understand the intricacies, it's a lot different than what you've just explained there, John. So appreciate you taking the time to go through that.
Yeah, and it can sort of be a little scary, but once you sort of decompose it, you start to understand that the business is quite healthy and we can manage these things.
We call them opportunities, John. Opportunity, not scary. Hey, another opportunity that some people think is scary is ATM programs. So that's another one that has come up with a lot of the miners in this space. Obviously, mixed kind of views on ATM dilution. Anthony and I have a pretty strong conviction. We understand the CapEx importance of this industry. We understand the global hash rate. You need to continue to grow, and the fact that there's limited levers available in terms of debt market and things like that right now. So just a couple comments, John. We wanted an update on your current ATM level and when you kind of plan on using that or utilizing it, and what growth that will go towards.
So on the ATM, we do have a shelf offering. And we are working on registering the updated ATM. We have a capacity, I think, about 100 million on the shelf. We do have a restriction that's tied to the convertible note on using that as we ramp down the convertible note, and that price will sort of ramp down as well as our stock performs. When we can use the facility, it will be focused on growth. That is the primary use of capital for the company. We will use it to participate in the equity and the financing of our projects. We will use it to invest in infrastructure and the development of different projects as well. And so I'd say investors stay tuned on that as we complete the specific registrations around that, and it becomes a tool available to us as a management team. The primary focus will be on growth opportunities for the business.
With regards to, just looking at the sort of the big picture now, looking at sort of how your company is valued from a market capitalization perspective compared to what you've got assets on the balance sheet. There seems to be, in your case, a big disparity. We see a lot of the big miners. There's effectively a big premium paid for the assets on their balance sheet. So you look at the likes of Marathon, look at likes Clean Spark, and they have significant amount of assets, but the market capitalization, the enterprise value, if you even go down to that level, so you can then start comparing, seems to be really high. In your perspective, it's the opposite. It's like you've got. Self-mining, we talk about self-mining, it's just a part of your business. You've already alluded to the fact that your hosting business has twice as much hash rate than the self-mining. You've got this demand response revenues coming through there. We're going to talk a bit more about the HPC AI business that you're starting to look at and bring in revenues from that, which is, from what we've heard from every other mine is positive at the moment. Mm-hmm. But when you just look at, even if you just said you were just a self-miner based on your hash rate of just under 1 exahash, it sort of values the market is valuing your exahash that you're mining at 3 cents a kilowatt hour at about $15 million per exahash. And if I look at Clean Spark is 168 million, Cypher 130 million, Marathon 130 million, and then some of them come down from there. It's under 130 million, but those three big ones there, the market is giving them a real premium. I'm just trying to into my own head is size obviously matters. It's market, but the disparity between 50 million and 168 million, that's sort of 11-fold. Difference in valuation, and does that sort of like you guys at the company? Is it something that you sort of like think, well, why aren't we getting the same benefit as some of these other companies? What do we need to do to be recognised? Because it's a standout metric that I'm scratching my head at. Even if you look at some of the really low value miners, still coming in 40, 50, 60 million an exahash, but you're at 15. And I don't know what your thoughts on that are. If it's something that, we're not really interested, we'll just do our own business and let the market decide. But it's all linked into sort of like market valuation, the ability to raise capital, to grow.
Exactly.
When are you going to get that sort of like, that move up, that leg up that you probably deserve, in the fact that you've got a business that's looks potentially from the outside really, really undervalued.
Yeah. Well, I agree with that analysis, first of all. And that's why I appreciate coming on the show, because you guys are very thoughtful about how you look at businesses and how the market should be seeing companies. Look, we've had a tough 2022 and 2023, and our focus over the last 18 months has really been about getting our flagship project Dorothy up and running. And we had to do an re-architecture of our business, and perhaps investors were thinking we should wait and see what happens with these guys. And as those things have gotten stable and we have moved past them, and we have proven our ability to execute, we think the market will recognize appropriately the value of the company. And when you put that in the context of what's happening with HPC and the renewable energy space, and the fact that our brand has become really strong in all of those markets because of the value and approach of our business model, how unique it is, eventually the business and the industry will see that we're weighing more over time, and perhaps they'll move from a voting type of approach to the stock to more of a weighing type approach to the stock. So our management is very bullish. We believe in our business model. We are confident, in fact, in our ability to execute and deliver on that business model. And as we grow, as we begin to expand in Dorothy, as we begin to deploy more projects, as we expand into these new areas, I'm confident that the investors that have been with us for all this time and been patient will enjoy the value that comes from the increase in value by executing on our business. So I think your math is right. We agree with it, but we're highly focused on just keeping our head down and building the business, and are confident that the market will see the true value of our company going forward.
Yeah, great response. That's my old boss used to say the same thing, John. Put in the work, the results will come. Just focus on the work.
Phrase we use over here is keep pushing. We just keep pushing. That's it.
Keep moving forward. Yeah, that's great. And speaking of moving forward and expansion, that's a great segue as well, John. We'd like to get some more details about the new cloud AI pursuit or division, and kind of where you see that in terms of the future of Soluna.
Yeah. So 3 years ago, I made a presentation to our board of directors. It was just about 6-7 months or so after the combination of our company with the public entity. And it was our 3 to 5 year strategic plan. And what it said in there essentially was that there is a convergence that is happening between renewable energy and computing. And we believe that the convergence is actually an opportunity to do something new and unique. We didn't have a name for it yet. And we said that to execute on that, we would have to do it in 2 phases. Phase 1 would be to prove that we can go after the market and prove that you can use computing to monetize wasted energy. This past year, we consumed more than 30,000 megawatt hours of wasted energy. I think that's almost 3,000 homes or something like that you can power. And that's a lot of revenue and electrons that are getting monetized. So we've proven you can do that. And people used to tell us you can't do computing out there in West Texas, and you can't do this type of computing. You've got all sorts of challenges with curtailment and matching to power, and we push forward to do that. And that approach was to take that power and monetize it using Bitcoin mining. That's what we call phase 1 of our business in that presentation. In phase 2 of the presentation, we put out the thesis that Bitcoin mining wasn't the only form of compute that you can do in this converging environment. High performance computing, and specifically batchable processes. If you go back and look at our marketing, 2 years ago, we talked about batchable computing. people were scratching their heads like, what the hell are these guys talking about? And what we were talking about was really complex computing designed to solve really hard problems. And we were talking about the fact that computing was advancing to a point where you can do that in a ubiquitous way. That is what generative AI is. It is using capabilities that are approaching 40 to 50 years old that have allowed the largest companies in the world to get that big by doing this stuff in-house, using AI to influence us on social platforms and so forth. That's now been unleashed to the world. And we're all realizing, holy smokes, you can use this to enhance just about everything of your business. You can do drug discovery. You can look at climate change. You can write a paper for your master's thesis, whatever you want to, however you want to think about it. We are now intertwined with computing being a key part of that. And guess what? That computing is compute intensive and it uses a lot of power. It's hungry, it's thirsty, it's dirty. And the solution to that is to converge that computing with renewables. Well, you know what? That's what Soluna is going to do. And that's exactly what we're all about. So over the last 6 to 9 months, losing track of time these days, guys, we have been focusing on developing partnerships that will help us to enter this business in a meaningful way. We have launched an effort to attract capital to support the development of a new type of data center that we've designed ourselves. We're saying if you want to do AI in this convergent environment, you get to rethink data centers to do that. And we have successfully attracted some very strong partners. We'll be able to name them soon. They're so big that we can go faster than them, so it's harder to name them because we can't get through their PR fast enough. But I'm telling you that when it does come out, it'll become clear that we're doing something meaningfully different. We're developing a business that will deliver sustainable, scalable AI to the marketplace. And that's going to drive a lot of revenue, growth, and profit for us. We're going to do exactly what we're doing today with Project Dorothy, but we're going to add AI to those environments using a new type of technology. So in the last couple of months, what we've actually done is we've launched these 2 pilots that will help us to prove out and test the technology that we're going to need to do this. We're partnering with this big player in their own data center, attracting customers into that facility. That's what we just announced recently. There will be 512 plus GPUs in that site. So this is a fairly meaningful size pilot. And customers will go into that facility, grow out of it and into our Helix set of facilities, and that will become the growth path for the company. That's the strategy that we're laying out. And thanks for indulging me on sort of giving the background. But I think it's super important to understand that we've been thinking about this for over 5 years, and it's just exciting to be doing it right now. We're going to say a lot more in the coming months, so I don't want to sort of steal the thunder from the team and what we're working on, but it's exciting times for Soluna right now.
One thing I'll say, John, is when I look at your presentations and then look at some of the photographs that are put out on social media, I used to think first they were AI photographs, until I was told that no, they're the sites, and I do like. I think is it a render the Helix one in the presentation?
It is.
It looks pretty amazing there. It looks very futuristic. And actually, I included one of the photographs in my recent Compass article of one of your sites there, because it gives a good indication that it's not all about just putting containers out there and putting miners in there. Some people are taking a little bit more time and effort to put in good facilities, and there's there are a few good miners that do that. I think the standards are getting a lot better, and actually that leap to sort of like AI facilities for some miners now who are offering services or going into that bracket, it's not as big a leap as it was maybe a year ago when people started talking about this space and the sort of like significant amounts of capital required for AI facilities compared to, say, Bitcoin mining facilities.
Right. Yeah. It's an opportunity for innovation when there's this much momentum and a host of different challenges. It's an opportunity for thinking laterally and I've been an entrepreneur and operator for 25 years, and this convergence concept isn't the first time I've seen it. Early in my career, I saw the convergence of PCs and the internet or communications, and you brought those together, and that allows us to film this show, for example, from our respective locations, and it feels like we're in the same room. That's because the PC has become a communication platform. Well, power and computing, that convergence allows us to create renewable computing, and renewable computing is something new and different that helps us to solve a bigger challenge, and that is, how do we get computing to become an AI to become an integral part of how we do business going forward? And that's going to happen. And our goal is to be part of making that true.
It's interesting you mentioned the internet there. Tim Berners-Lee, who's he sort of like invented the internet, and
Yep.
he was at the university 2 miles from where I live in Southampton, UK. So
oh wow, that's cool.
Yeah, fun cool. Fact for the podcast.
There you go.
There you go.
Just a quick question on the sort of the growth side, and we grow obviously from your presentation, growing out the hosting, growing the AI. What about the in terms of self-mining? Do you see the growth in that particular area as well? Because, as Bitcoin price, if it does rise, like all these experts are predicting, it sounds like it could be, going back into the, more profitable position.
Right. Yeah. So our business model, like I said, I always put out that sort of 4-quadrant view of how we make money. Hosting will continue to be a majority of our mixture because of the way we finance our projects and what investors' appetite is. But we do look at joint ventures as well. So we will do prop mining. It'll always be in a joint venture structure. So we make sure we have a capital partner that's ready to join us if we need to refresh machines, that sort of thing, because prop mining is a completely different animal, if you will. And so we think that certainly will continue to persist in that sort of 4-quadrant. It will be project specific and capital specific. But when you look at that mixture, our goal is to continue to grow those portions of the business that create sort of stable, repeatable revenue streams over time.
Do you think there's any appetite in the US for like cloud hosting in terms of self-mining, whereby you look at the model that BitDeer operates, and it's predominantly in their Asian sector that it's real appetite over there for a number of obvious reasons, but I don't see as much in the US. Is that because of the fact you get this really cheap power? That would appeal to people, individual retail investors who think, I'd like to do a bit of, have a little bit of a say in the Bitcoin mining space, and being the conduit of how to do it. Is that something that you've even looked at? Because I think the margins, certainly from BitDeer's perspective, are even better than the self-mining margins. So it looks like it's a profitable business, but I don't know if there's appetite in the US or in North America for that type of service.
Yeah. So we do have some exposure to that indirectly because we partner with some of the players in the space, like Compass Mining, for example, that do this type of retail-based delivery of mining as a service, if you will. And again, our strategy is to partner with one key client, let's say in a site or partial site. And to the extent that their business model is tied to that, we certainly underwrite it and look to make sure that they're going to be a good client for us, and we put that in our facilities. But we don't currently have plans to directly deliver that offering to the retail environment. We're not structured for it. We're more of an infrastructure business, and we want to have strong.
I'd imagine it take a lot of administration to run that type
exactly.
of.
Yeah.
So I appreciate it. It was just to be honest with you, the question came up 30 seconds before I asked it. So just as we're going through services and thinking, because of your, I still can't get around. It's the energy price. It's like you've got such a opportunity in literally every segment, really, because you keep that price down there. I'm talking with HPC users in the UK, and the deals over here we're talking, if I put it into US, it's like 12, 13, 14 cents kilowatt hour. That's good, because the domestic rate is 35 to 40 cents a kilowatt hour.
Right.
So that's getting a good rate in the UK. So you talk about 3 cents, and we're getting hammered for for industrial rate over here, probably 4 times that amount.
They call that the old competitive advantage for Soluna.
So we're gonna switch off the internet soon because that's ours.
There you go. I'm still upset you didn't invent it, Anthony.
You nailed it, Anthony. I mean, yes, we have something special, which goes back to your other point, like why aren't people valuing that? But I think they will over time.
Yeah. No,
hey, just a quick one, John, and then we're through our list. I'll let you wrap up here.
Okay.
We just wanted to know on the M&A front, it sounds a lot either through joint ventures or organic growth through kind of that Dorothy template you guys have. Sounds like you've got a pretty good organic growth plan ahead of you. And I'm sure you'll say we always have our eyes open for opportunities, as most CEOs would, but is M&A really a big focal point at this point, or do you guys feel the organic growth is where the focus is?
Yeah, we've got plenty of work that we've got plenty on our plate from an organic perspective in our pipeline to sort of sink our teeth into. Imagine we got a big plate with a giant sandwich on it, and we're eating through it. But look, we always remain opportunistic. Our standards in terms of a combination is quite high because our business model is very unique. So it would have to be something that would enhance that business. But in the meantime, we're just really focused on what we know how to do, and that's develop, build, construct, and own projects that can deliver that sort of compute resource to multiple different markets.
Makes sense. Appreciate it. Yeah, we're through our list. Anthony, anything on the top of your mind that we didn't get to today?
Not specific. I think we've covered sort of like the key areas that people would be interested in. I mean, we go back to the fact, it's that biggest driver is that energy price, and the fact that you can utilize that stranded energy effectively really well, and revenue goes back into that pot there for the energy provider as well. So it's a win-win all round, and that's probably the future of how Bitcoin is going to look in years to come, because it's all about energy price. And we go back about 18 months ago when people were saying the next halving energy price doubles, and people just coming out with these numbers, and what we're seeing now is starting to see some people be getting really good rates of energy prices, like you guys are, and a few of the other miners, able to use these demand response credits to help them. So curtailing at the right time and providing those sort of services to the grid, being good citizens, and also having them. I mean, the miner efficiency of the machines now compared to what they were 18 months ago is just a whole different plane. The S21 Pros and its equivalent models for micro BT, they're pretty much game changing. I mean, these are 100% more efficient than the S19s when they came out, and when the XPs came out, we thought that was the level of technology sort of starting to level up, to level out then, because we didn't think there was that much far to go. But I mean, we're hearing now it's going to go even further. There's machines potentially coming out this year that'll make the S21 Pro look twice behind its back. So it's a good position all around, especially for you guys. But as energy is the biggest cost for a mining company, it must please you that you, at least from that perspective, you're in the sort of the top tier in terms of having one of the lowest costs across the board.
Absolutely. In the Bitcoin mining space, it does give us an incredible advantage. And it's not just the energy price, but also combined with our proprietary ability to, use that energy in different ways to enhance our profitability. And that takes some smarts. And we think that same advantage will help us incredibly as we move into this new market. And the other thing is, we not only have great energy prices, but we have lots of energy. So we can build really large utility scale sites, which positions us well for a growing hosting market, as a lot of the big miners are focusing on scale. There's all this exahash coming online. They need space and power to land that. And we have been focused on a lot of training and operational and technology initiatives at Soluna to really position us as one of the top tier, if not the best, hosting provider in the Bitcoin space, where customers can leverage what we've built here to help to grow their business.
No, that's quite right. I mean, there's 3 years ago, nearly all the miners that I cover had hosting businesses as well as self-mining businesses, and they've all disappeared. Riot platforms have got they've got rid of their customers now at the Rockdale facility, and there's literally Core Scientific who are still a big player and are still doing well in that particular area as well. They get generally good margins, good operator. You've obviously got the likes of BitD, you've got the likes of Hut, who now they've merged with USPTC, have gone back into the hosting business because they were a host company themselves in Canada many years ago. And, you could see one by one, it just wasn't proving profitable. But at the level of energy costs that you're paying, and bear in mind, a lot of the miners we speak to are paying upwards of 4.5-5 cents a kilowatt hour. That difference in that margin there makes the hosting business then start to look really, really, really good for both you and for the company that are hosting. In your sites.
It really.
So it's a win all the way around. But yeah, no, great to listen to this today, John. Really enjoyed it.
It really is a game changer. And not to mention, we haven't even talked about the ESG component. This is stranded renewable energy. It's incentivizing renewable energy projects. There's so much more to this in terms of what it does for the planet too. But John, I know we've taken up we call them power hours now, buddy, the full hour. Power hour with Power Mining. It's earnings day for you. You're a busy guy. You've got a lot going on. Like you said, you got a full plate of food you guys are trying to eat there at Soluna. We'll give it back to you for any closing thoughts, but thanks so much for your time. Very enlightening as always.
Jens, thanks again for having me on again. I always enjoy it. Your questions are always very thoughtful, great engagement, and I just love the show. From a closing remarks perspective, I do want to thank our team and our shareholders for continuing to support Soluna. I am incredibly proud of what we've accomplished in the last year and in the last quarter. And I'm grateful to lead this organization. I would encourage all of you to stay tuned. The best is yet to come.
Sounds good. We'll stay tuned. Thanks so much for your time. We'll see you guys tomorrow.